Welcome to DLSN, a podcast brought to you by McGuireWoods. DLSN promotes the advancement of women in private equity and finance through conversations with women in the private equity and finance space. These conversations provide both insights and practical takeaways to inform your deal work and enhance the culture of your organization. If you're ready to drive the industry toward a more inclusive and diverse environment, then it's time to come to the table.
Hello, I'm Penny Zacharias, a debt finance partner with McGuireWoods, and I'm excited to welcome you to our podcast today, DLSN. Today, we have a special guest with us, Sheila Emami with St. Cloud Capital. Sheila, why don't we just start with you telling us a little bit about yourself?
Great. Thank you so much for having me, Penny and team. Yeah, I'm Bay Area born and raised. Someone called me this once and it kind of stuck. I've been told that I'm an originator, which means that I have over 10 years of originating, structuring, underwriting, portfolio monitoring, and risk management experience with credit solutions, primarily to middle market companies. I've worked in banking, working with special situations, international companies, financial sponsors, and domestic companies through two different economic cycles. In terms of industries that I've covered, I've been a generalist working with companies that are in tech-enabled business services, mission-critical manufacturing and industrials, value-based healthcare, and consumer products. I joined St. Cloud as a vice president in January 2023, and I'm focused on providing growth capital in the form of debt and minority equity to small and mid-sized businesses nationwide.
I really like that term, originator. I don't think I've heard that. It's good, though. It really captures a lot of things there. Tell us what first attracted you to the finance industry.
Sure. I think I fell in love with the finance industry because it was something that I explored myself based on my economic interest in economics. I had a not so uncommon story where I'm the daughter of two immigrant engineers who told me that there were three acceptable options for my career path. Essentially, doctor, lawyer, or an engineer. None of those routes were avenues that I was particularly passionate about. I had great teachers and professors who taught me economics, and what started with one class ended up turning into a major. So my feedback to people who have an interest in industry is to follow your passion and what you're good at, because that's essentially how I got started. I love that finance allows you to practically apply economics, and there's a big people element to it as well, because you're providing solutions to CEOs and CFOs in the active pursuit of helping them with meeting their financial goals. And in the lower middle market, you get to learn about new sub-industries and niches that sometimes fall below the radar of large capital providers. So there's always something new to learn. It's also an industry that allows you to solve problems, think critically, and take calculated risk, which is something that I particularly like. Entrepreneurs are like the artists, the creatives, the risk takers, and these businesses are like their firstborn children at times. So what makes me happy is providing capital to these developing companies so that they can get to like the next stage of their growth. And it's a great medium for me.
That's great. So you had the economics and then, the foray into finance. And then at what point did you determine that private equity was for you?
It's interesting because although I worked with my first private equity-backed company early on in my career, I had my aha moment in the pandemic when I was working with lower middle market companies. And one in particular, we'd provided capital to help them with their acquisition financing. And it was, of course, incredibly uncertain time, but we stood by the company and helped them with completing their add-on, which was ultimately transformative to the smaller company. They were able to double in size in less than a year, which was a great outcome. And also, we were able to provide capital, which was used to retain U.S. jobs. It was through this experience where the wheels started turning, and I said to myself, how much more impactful could I be if I was lower on the capital stack or part of the board of directors? Could I build better relationships with management teams and provide more transformative growth capital? So one of the great things at St. Cloud is that we use this relationship-driven approach to providing capital rather than transactional. We get the benefit of being able to tailor solutions that can better fit the needs of dynamic companies rather than being limited to just providing debt or just providing equity solutions. So moving to St. Cloud has allowed me to leverage my credit background while having a seat at the table for board discussions. And it's been an absolute privilege to partner with great management teams and allow them to scale during this pivotal time in their growth journey, because today's $50 million EBITDA businesses were once $3 million in EBITDA or $5 million EBITDA businesses.
Sounds like your background has really served you well in making this switch over to private equity and acting as, all things including advisor to these businesses. Let's talk a little bit about the specifics of your firm, the types of investments that St. Cloud makes. And I'd like to start just getting your perspective on impact investing. Many firms do it. Many firms define it in very different ways. So curious to see how your firm defines impact investing and works in that space.
Sure. So our impact mission really aims to achieve a positive community impact by providing growth capital to small businesses and underserved communities in the US by driving job creation and economic growth. We're really trying to address the wealth gap in these underserved communities by promoting access to skilled employment opportunities such that the total cash compensation that the employees receive either meets or exceeds the median household income in the company's market. Also, we advocate for best practices in corporate governance and broad-based employee ownership with the goal of underwriting at least 30% of our fund's investments that directly address our impact mission. And in 2022, we joined as a signatory of the UN's Principle for Responsible Investment and the UN Sustainable Development Goals that are most directly linked to our impact mission include decent work for economic growth and reduced inequalities. But this isn't really new to St. Cloud. We've been a provider of capital solutions to underserved communities since the firm's inception, and we view the alignment of interests with founders, managers, employees, and other stakeholders as instrumental to the success of these small businesses that we invest in. During our due diligence process, I'm responsible for underwriting potential measurable impact of our investment and monitoring the impact accordingly along certain KPIs such as socially disadvantaged people hired, gainful jobs created, and generational net worth opportunities available, which are largely benefits provided to employees ranging from insurance to stock options.
It's fascinating. So you did mention that this focus has really existed on impact investing since the inception of the firm. What was the genesis behind that focus on the positive community impact and the goals that you mentioned?
Yeah, so some of our founding partners have been owners and operators of companies themselves. Bob Louts in particular has served on over 40 boards and has owned and managed businesses. So these values have been core to the firm's way of thinking since inception based on actual real-life experience. We find that when the individuals who are driving the growth of these businesses day in, day out are able to benefit from the growth of these companies, and when incentives are aligned internally, it can result in favorable outcomes for everyone. So an example of this is one of our past portfolio companies that was in the video game development space called Pipeworks, which was actually in a former Burlington coat factory building in a LMI or low to moderate income zone in downtown Eugene, Oregon, where we put together an employee ownership plan that was actually double the size of a typical employee stock option plan. And the employees were provided a total cash compensation and a combination of essentially cash and stock equity. So we set aside terms to float the opportunity for management to invest in the round. And through our time that we invested in the company's EBITDA nearly tripled and the company's headcount increased from 70 to over 200 employees, adding additional engineering talent and supporting the growth of skilled jobs to an underserved community. So, this long-term strategy of investing in companies in underserved communities has resulted in over $2 billion of revenue growth and in creating or sustaining over 19,000 jobs in our portfolio companies over our 20-year history, which is something that we're quite proud of.
Yeah, thank you for that. Maybe just going a little bit deeper with respect to the work that you're doing. I mean, you've talked about the entrepreneurs, the value that they get with partnering with the firm. But what do you think today, some of the greater challenges that entrepreneurs who are in these underserved communities are facing?
Yeah, so I think access to capital is still an issue, especially in the lower middle market. And with last year's change in the overall banking sector, we are seeing some banks have by and large moved more upmarket in terms of the companies that they're partnering with. But that said, the lower middle market has become more efficient since our firm's inception. You're seeing more SBIC funds form. And some of these groups we've partnered with in the past and have collectively provided a small or medium-sized business, a larger debt facility, or debt plus equity solution that has allowed the company to scale. But the market is certainly not as efficient as if you're a company that has over $15 million or $20 million in EBITDA. And then as it relates to underserved communities, I'm going to focus on women-owned businesses for a moment. Wells Fargo put out a report earlier this year that women-owned businesses, while they continue to fuel the economy, represent 39.1% of all businesses, employing 12.2 million workers and generating 2.7 trillion of revenue. And even so, the research has shown that only 2% of VC funding goes to women-founded startups, which suggests that women are facing, more rejection when they're asking for capital. So I think having earlier conversations with accountants, lawyers, bankers, and capital providers, setting up your books and records and dashboards to be able to show and track the data and the growth of your company, leveraging your network so that you have a larger friends and family round, or seek government grants and SBA loans. The SBA actually has a website that's focused on providing support for women, minority, veteran-owned small businesses. This kind of prep can be really helpful in setting you up for success in accessing capital.
Along the same lines, in terms of the investments that your firm would be seeking, what are some characteristics that you would look for in operators and companies that your firm would partner with?
Sure. So every company is nuanced, but typically we look for operators with long-standing track records of operational success that are highly dedicated to what they do. If the company that they're working for has a more limited track record, what did management team do previously, and how can they leverage their background to successfully grow the business? I think being non-control investors, we're partnering with these creatives, these entrepreneurs to help them with expanding their business. The success of our investment really relies on their ability to execute on their plan. So manager selection is at the top of my list. We're often the first institutional capital that'll come into these closely held businesses. So through our board seat, we're helping to put in place best practices that can really help the company scale and can be strategic as we help these companies with graduating to the next level. Ultimately, though, we're maintaining strict underwriting guidelines as it relates to our investments in these companies. So companies with sticky customer base, stable and growing cash flow characteristics because they have secret sauce, economic moat, durable business models, and have fared well in a recessionary period is typically what we look for. And sometimes they can be in industries that you may not have ever heard of or thought much about previously. And that's part of the fun of identifying some of these companies in niche markets and partnering with them to scale the business.
Sheila, talk to us a little bit about some strategies that can help people within these underserved communities advance in their own organizations, perhaps things that you've seen work well and, recommendations you would offer.
So I think becoming a subject matter expert or an SME in your craft and being resourceful to your community and ecosystem are ways in which people can advance themselves in their organization. Being your own advocate, managing your career, proactively networking with your peers, people below you, and people you hope to one day be more like can also help you with getting the right visibility, feedback, and opportunities. I'd also say being persistent and not taking no as a final answer in business is really important. Whenever you're doing something different or perhaps something that hasn't been done before, you will inevitably have resistance. So being prepared, doing your homework far in advance, being resourceful, asking for help from your network, being thoughtful and a problem solver, even if it's not in the job description, can certainly help with advancing.
I would like to shift gears sort of back to your own career advancement and ask you, when you look at your own personal journey, what are character traits that you feel have contributed to your success within finance and private equity?
I think being resilient has been a huge part of my success. Being able to adapt to changing markets, changing companies, changing deal and management teams, and staying dedicated to my career path have certainly contributed. Some of my core characteristics of being intellectually curious, being a self-starter and self-motivated, asking thoughtful questions instead of taking things just at face value, but really trying to understand the why, being able to think ahead and plan for option A, B, C, D, not being shy and putting myself out there as it relates to building relationships, spending the time and learning all about different parts of the growth capital process have certainly helped me in my journey. I also like to travel, so I think being energized by going to different cities and speaking with different people has helped me because ultimately this is a people-based business. Yeah, I didn't know exactly what I wanted to do when I was starting out with every opportunity, but I always asked myself about the tools that I would be gaining and putting in my toolkit and how that would get me closer to my ultimate goal of building relationships with companies and their management teams. And then doing the work off hours certainly didn't hurt. When I was in my financial analyst program at Wells Fargo, I was taking accounting classes at night. So when I was in my financial analyst program at Wells Fargo, I was taking accounting classes at night and then learning on the job. So I think it's important to push yourself to always be learning, whether that be augmenting your technical skills or your deal knowledge or industry knowledge, but also the softer skills like how to better communicate and present ideas.
Yeah, thank you. And I am just curious. I really like this question here. How do you believe that women of your generation are going to be able to influence the industry, particularly as career paths continue to evolve?
I think we have an opportunity to build a sense of community with more diverse owners and operators of companies, as well as more diverse investment professionals to change the overall landscape and potentially drive more favorable returns. So, focusing on women in PE for a minute, McKinsey put out a report that said that women in PE are still underrepresented in leadership positions with only 20% in managing director roles. I hope that more people subscribe to this school of thought that, it was difficult for me to get here, so I'm going to pay it forward and make sure that my lessons learned are passed along so it's easier for somebody else. And I think with that approach, the numbers should be different 10 years from now, and you would see more representation, not less.
Do you have an example of someone who has inspired you?
There are so many people that come to mind, but I've been fortunate to be coached or mentored by either formally or informally by great bankers and capital providers. Kara Roll of VMG Partners comes to mind because that was the first time I interacted with a managing director of a private equity firm who happened to be a woman. And she was someone who was so generous with her time, which was invaluable early on in my career. She was also on the board of Kind Bar and Drunk Elephant and Sunbum and others, and an advocate for more women on boards. And Kara went to Colgate University. I think having that as an example showed me a pathway or a roadmap to what could be possible for me in my own career, which is why I think representation is so important. And it's something that I hope to pay forward with the people I work with and the people I mentor, which is that you can have a liberal arts background and have a successful career in private equity.
Oh, absolutely. Well, final question for you. What advice would you give your younger self?
Oh gosh, so many things. As my dad says, though, I think you cannot have a better past, and hindsight is always 20/20. So what I can do now is remind myself of these lessons and try to pay it forward to others. The best piece of advice that I wish I had at 22 years old is to carve out some time for yourself every single day. I think you'll be a better investor, a better daughter, a better friend, happier human. So I'm like an early morning person. And what I used to do was send emails early in the morning and get ready for the day. And now I do some of that prep work the day or the night before, and instead structure my life such that when I wake up at 5 a.m. and have an espresso shot or two, then I can go and attend a group fitness class or meet with my personal trainer. So doing something that energizes you outside of work, I think, is key to longevity. Even if you're on the West Coast, you can still carve out time for yourself between the hours of 5 a.m. and 6 a.m. if you're working with East Coast partners. But not everyone's wired this way. So I tell my mentees and people I giving this feedback to that, this is what worked for me and it might not work for you. So you need to find out what makes sense for your life. And that might mean carving out time on late at night or on the weekends. But I think having that ability to listen to your own inner voice, trust your gut, You know yourself better than anyone else. Keep building tools in your toolkit, focus on fundamentals, and this combination can be a very powerful place to be, especially when you're doing something that has little roadmaps or reference points to look at.
Thank you so much. That was really great advice and really insightful, all of it, and appreciated the response on the last question here. So I just want to thank you again for joining us today. We've been thrilled to have you join us in today's podcast.
It's been wonderful to be here. Thank you so much, Penny.
Thank you for joining us at the table for this episode of DLSN. If you have a recommendation for an inspiring interviewee, a question you'd like us to ask, or topic you would like to hear covered, or if you'd like to tell us about women-focused initiatives in the field, please email us at wpef@McGuireWoods.com. We look forward to hearing from you. This podcast was recorded and is being made available by McGuireWoods for informational purposes only. By accessing this podcast, you acknowledge that McGuireWoods makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in the podcast. The views, information, or opinions expressed during this podcast series are solely those of the individuals involved and do not necessarily reflect those of McGuireWoods. This podcast should not be used as a substitute for competent legal advice from a licensed professional attorney in your state and should not be construed as an offer to make or consider any investment or course of action.